Happy Sunday to you and welcome once again to the Bear Bull FX channel. I'm your host Bear Bull King, and today we're going to run through the weekly analysis that we're expecting for the new week. The new week being the 9th to 15th of July 2023. My first week was very fantastic because last week we anticipated that we're going to have some moves in the market, particularly with gold and GU. And both market actually delivered what we expecting. Gold actually delivered to the letter, and I made roughly about 600 pips trading gold alone. It was awesome, and I hope you also had a fantastic last week. But the new week is coming with a lot of opportunities, and that's what we're here to look at for this week. So let's move quickly to the calendar for this week, 9th to 15th, and from what I can see we may have a gap in pounds pair because the governor of the Bank of England spoke today. He would also be speaking tomorrow. That's the only news for tomorrow, being Monday. Then Tuesday we also have news on pounds. So what I'm expecting is I'm expecting a lot of movement on pounds between now and Wednesday because of the rate of activities on pounds. The first news for USD is coming on Wednesday, the 12th, which is CPI, and that's month on month, year on year, then core CPI month on month, then the 10-year bond auction. Aside from that, then Thursday we also have core PPI and month on month, then PPI month on month, then unemployment claims. So we can expect liquidity on Wednesday, as in mass liquidity on Wednesday afternoon and Thursday afternoon. Then on Friday we could expect some movement. So the good part about this is when you know the period when you're expecting fundamentals, you can use it to either be very active or be less active, because that's when there could either be liquidity or there could be a lot of hunts in the market. So that's what this helps us with. And this week is fairly influenced by news, so we can actually make the best advantage of the market this week, meaning that our technical analysis should play a very huge role in what we're expecting from the market this week. Alright, that said, I would like to go to the chart to see what to expect from the market this week. Okay, alright, fantastic. Now we are looking at the chart. If you remember, I did mention on gold, I always love starting with gold because gold is highly volatile, and gold can give me the number of pips that EU may not give me in a month. It can give me in a week or even in a day. So last week, or at the beginning of the month, I did mention that this point is an order block because we had a pullback around here, right? And aside from the order block, I also mentioned that if you mark this point, because this is the last low and this is the new high, all right, if we apply our Fibonacci from here to this point, we had the price exactly around 61.8 fib level, as you can see here, 61.8 fib level. Okay, now because we had the price at 61.8 fib level, I mentioned I was anticipating a reversal pattern here, and if this happens, I'm expecting the market to move towards let me see, I'm anticipating that the price would move towards this point. Let me bring it down a bit, which is around 2,245 ounce per dollar. All right, giving us, for those that would be able to swing the market, if we have a nice rejection here and the price goes above this point, then we can expect it to get to this point. All right, so if we look at it, that's roughly about 3,000 pips in expectation. What does that mean? I'm not a position trader because I don't have that kind of money to trade. Sometimes I dabble into swing trading, but most of the time I do day trading. What this simply means is from now at 1,900, 1,925 thereabout, till the price gets to 2,245, all I'll be looking for would be opportunities to do what? To buy gold. That's what I'll be looking for. I'll be looking for opportunities to buy gold. And the reason why I'll be looking for opportunities to buy gold is because I want to take the best advantage of the market. Okay, so with every pullback, provided that the market keeps going up, I'll be looking for opportunities to buy gold. So I can take this and make 500, come down, add it again, take another 500 till we finally get to this point. Remember I said something last week that a lot of traders usually make a lot of errors in the market because they tend to forget the analysis they've done on the higher time frame. So don't be that type of trader. That's the reason why my weekly analysis usually starts from my daily setup and then I break it down to my 4-hour setup. Now 4-hour setup is done once a week so that it covers what you're expecting for that whole week. Then every 10 to 11 p.m. I do analysis on 30 minutes and 1 hour so that I can anticipate what to expect for the next day. So right now we have a kind of reversal pattern here. So I'm expecting this price to break into this range this week. If it does break into this range, then I would see if it will follow this. Now the fact that I've drawn this here, the only reason why I have this here is because I have something similar here. Alright, as I always say, to trade right, always look left. To trade right, always look left. So we have here, we have a pennant here. So this pennant the opposite of a pennant is an expanding triangle. So I'm anticipating that we may have an expanding triangle here, and if that happens, I will take advantage and ride the market all the way to the top. But for here, what I like is we had a nice rejection here on the 30th, 29th of June, and then the price came up and then came down here, and then we have a push up. Okay, now if I delete this, let me remove this and I zoom in a bit. What we have right here is similar to what we have right here. Alright, you have a bearish candlestick, a pullback, then a bullish candlestick, and I mentioned I was expecting the market to go up, which is what happened. Then the market did what? Came down again, came down, and then what happened on Friday? The market pushed up. So we have a morning star setup here, we have another morning star setup. So what am I expecting this week? I'm expecting that this week we should have the market break into this range and then maybe pull back somewhere around here. Okay, so this is what I'm expecting for this week, and then we can now expect the expanding triangle as we can see this pennant here somewhere here before we continue moving upwards. Okay, so this is the daily time frame. The daily time frame is telling me that the market is going to be bullish next week. Now I'll go to the 4-hour time frame. Now this is the 4-hour time frame, and for those that have been following me, if you've not been on my Telegram channel, please join the Telegram channel. It's very simple. Telegram, chat me at BearbullFX and I would be able to add you to the Signal channel. Alright, or just check out BearbullFX. Once you check BearbullFX, if you check my profile, my bio, you will see the link to the YouTube channel there. You could check the YouTube channel. Okay, now what we had here was the market came from here down here, ranged a bit, as you can see here, ranged a bit, came up here, came down here. All right, pulled up to this point and came down here, then pulled up here, came down here, and now it's somewhere around here. You don't need a magnifying glass to tell you that what we have right here is a sort of head and shoulder pattern. Let me delete this so that I could draw it clearly. Okay, and head and shoulder patterns are reversal patterns that people use to trade the market. So right here we have an inverse left shoulder. This is the head right here, and then the price came up here, pulled down here. Now here, if you notice, this is where the left shoulder got to, but here what we had here was news effect where people's stop losses were haunted. All right, and that's the reason why I tell traders that before you enter a trade, wait for a candlestick confirmation. And now we have this. Okay, so right now the price is somewhere here. The price actually came up to this point, and you can see that the head and shoulder setup is complete. For our comfort, what we would be looking for would be this market. Let me delete this. Let me delete this first so that I'll explain it clearly so that you can see. The patterns always speak. We had a range here and we had a range here. So in this range, I was buying and selling. And when the market broke out here, I took a sell down to this point. I took my profit here. And immediately the market came to this point, we took a long buy to this top here at 1932. This was where we got out of our trade. Okay, now right now what I'm expecting is I'm waiting for this market to break above into this place and then pull back and then move up this way. Now you'll be wondering, why am I expecting this kind of move? Simple, because the market gave me the move here. You can see this, the market pulled back and then the market came down. All right, so since I'm expecting this, what should I also look out for? I'm also looking out that here we had, before the market initially broke into this low, we had a pullback here before a retest. So if we're going to do a reverse of this, we could be looking at the market coming towards this area. Okay, we could be looking at the market coming towards this area. Now this area is around 119. What does this mean? This means that this price may come like this down here, maybe Sunday night, come here, push up above, pull back a little bit to this level, pull back a little bit to this point, then give us the up move to this area, pull back a little bit, then touch here. Then from here we'll be looking for a confirmation to a drop to this area, maybe a pull down to this area before we can now have a push upwards. Okay, so all I'm simply saying here is, to trade this market, I am looking at what has happened in this area. All right, I'm looking at what has happened in this area. I'm looking at what has happened in this area. That's what I want to use to trade this area. Don't mind me with all my joints, I'm just so I'm expecting a move like this from the market, but time is going to tell. So what am I saying here? I'm saying let's look for a possible opportunity, right, to wait for this market to give us a reversal candlestick confirmation somewhere around here, because we had a pullback to this point, and then we could buy the market to this high side. At least if you get a reversal candlestick from here, you can make, say, roughly almost 170 pips. Then it pulls back, you look for another buy, you add to it, then you buy, you keep adding with every pullback till it gets to this point, which is around Let me see, let me put this here. 1964. 1964 will be an okay place to set your TP for this trade. Then you wait for a confirmation of reversal before you write the price down to this area back. Okay, you don't need to take everything in the market. Here is okay for you. You wait for a confirmation and then you take a buy again. So this is what I'm expecting on gold for this week. I'm not doing more than this. This is all I'm expecting. Now, those that trade smart money would understand that if you look at this bottom here, for every point we had the fair value gap filled up, but from here, that's here, to this point, we have the fair value gap still open. All right, we have a fair value gap somewhere around here, which is between 1916 and 1921. Okay, what fair value gap simply means is for every candlestick movement, there's usually a slight pullback, then a weak. So for example, here we had a bullish push, then the wick pulled back to this point, and then it moved up. Now, after it moved up, you can see the wick filled this point and then moved up, but this place has not been filled out. So for me, if you ask me, okay, what should I do, Topper or Bearable King? What I would say you do is from here, you can take a buy, set your take profit, say somewhere around here, because we want the price to break into this range. All right, and your stop loss will be somewhere around here. So you have like a 40 pips stop loss and you have like a 200 pips take profit for this week. If you take this trade alone, you're going to make tremendous profit. So I'm anticipating that this price may pull back to this point. All right, do not take the sell. The sell is anti or counter trend trade. So if you take the sell and the price pulls up, that will be your loss. It's a risky trade. I want to encourage you to do that. So from here, we can expect the price to move up like this. Then from here, we'll look for a pullback somewhere here to take to this point. Then from here, we'll take to this point. So what am I expecting here for this week? I can take this trade, leave it open, set my take profit here, which is almost 8 times 8 or 8R of my initial trade. I could take another trade somewhere around here, set my take profit here. By the time I'm setting my stop loss somewhere around here based on candlestick confirmation, I would move my stop loss of this one up to the same point. Then, so by that time all my trades are already risk free. Then I take one more trade somewhere around here. My take profit is somewhere around here. Remember that we're using candlestick confirmation. We're not just entering the trade anyhow. So I'll have like 3 trades like this. So for this week, these are the 3 trades I'm expecting. You could pause this video right here, map your chart, and take these trades. So the first trade is going to give you roughly about 400 pips. The second trade is going to give you roughly about 337 pips. This is about 470. This 330. If you add that together, that's about 800. Then this is about 174. So roughly this week on gold, I'm looking at making close to about 1,000 pips just trading this upward movement. This is how to stack trades. In my own opinion, I'm old school. I've been trading for well over 10 years. I didn't start when they started stacking trades, so I trade based on confirmation, and each analysis is different from the previous one. So I'm expecting a move like this. Map your charts. All you simply need to do is set your alert at these areas. When you see the candlestick there and you get a bullish candlestick confirmation, what do? You take your buy and ride the market to the top. As a matter of fact, I think I'm going to take this picture and I'm going to post it on my Telegram group right now. I think that's what I'm going to do. I'm going to post it on my Telegram group. The Bear Bull FX free signals, so that you can take advantage of the market. Okay, so this is what we're expecting overall. all right, from the market on gold this week. Then from here we can look for a pullback to this point, but after making 1,000 pips in a week, I don't think it's really necessary to rush the market. What do you think? Well, the choice is actually yours. From here we may see the market then reverse back to this area. Okay, so this is what I'm expecting on gold for this week. All right, fantastic. So we have GU here, which is our next pair. If you recall, on GU I did mention on the weekly time frame that we had an upper point here and we had an upper point here, which was a resistance that may act as support around 2.16, which the market actually did. But for some reason I was anticipating, or I was looking for the best entry somewhere around here, which if I apply my Fibonacci from this low to this high, for you to understand this you need to watch my previous video, right? I was anticipating that the price was going to pull back to this point and then move up, but guess what? The market bounced off 50 fib level. Okay, the reason why I didn't trade this asset throughout the whole of last week was because I was so engrossed in gold, in the gold trade. So right now I'm looking at this candlestick here. This was 30th of June, which was a Friday. So from Monday, all we needed to have been doing was to buy, because we had a nice reversal here. This is a bullish engulfing candlestick, strong bullish engulfing candlestick at a 50 fib level, which apparently is a key weekly area, which was a previous resistance 3 times and now serving as a support. So what am I expecting on this trade right here? I personally am anticipating that this price is going to move all the way to the top. From where the price is currently to where I'm expecting it to get to is roughly about 500 pips. Let's say roughly 500 pips. Now why am I saying 500 pips? Okay, very simple. See this point here. Remember what I said about fair value gap? I'm anticipating that on the daily time frame, this price at some point in time may pull back. Just understand the concept and mark the levels. Okay, I'm anticipating that this price may push up a bit, pull back to this point, which is around 1.2789, then move up to this point, meaning that the price will keep moving and giving us higher highs and higher lows till it gets to this point. If it gets to this point and you buy from here, you're looking at roughly 500 pips. That's why I said 500 pips in the beginning. So in this kind of situation, if you want to buy, you can set your buy somewhere here. For swing traders, okay, set your buy somewhere around here, set your stop loss somewhere around here. So you're risking about 130 pips to make about 540 pips. Okay, so you can actually take a trade like this and ride the market all the way to the top. Okay, it's not rocket science. Trading is not rocket science, but it involves a pattern, so it's actually a rocket science. Okay, so for GU as well, I'm expecting GU to be bullish. We'll be looking for a move like this. The reason why I set my stop loss here is because this was the last low. I don't expect it to come below this point, then the price may actually touch this point and then move up. So I have my stop loss here and I'm expecting the market to move from here to this point. I won't encourage you to sell because the price may also continue moving upwards. The trend is your friend. Do not trade against the trend. Alright, so you can make 500 pips in an upward movement, but this is the daily time frame. As I said, I'm taking these pictures and I'm posting it on our Signal page so that we could take advantage of it during the week. On the Signal page, I actually interact during the week and I share charts with subscribers so that they can take advantage of midweek movements in the market. Let's check out what the market is going to do on the 4-hour time frame. All right, fantastic. So this is the 4-hour time frame. If you remember, I drew this channel. I was expecting that the price was going to pull down to this point, but the price didn't do that. Instead, what happened was the price pushed up. Now, because I was so focused on gold, remember, when it comes to trading, you don't need to trade more pairs to make more money. Let me take that again. You don't need to trade more pairs to make more money. Why am I saying this? The reason why you're trading is so that you can take advantage of the market. You can trade one asset and make good money from that asset than trading 20 assets and then you're confused along the way. Okay? So last week I had good opportunities on gold, and because I had good opportunities on gold, all I simply did was I focused on gold and made a lot of money trading gold. So right here we had the price break out here, and what happened? The price pulled back, and here we had a confirmation that okay, this market is not coming in. Now the reason why this was my confirmation is because this candlestick is still connected to this. As long as a new high is not created here, this candlestick can as well still come back into this trend. But what happened? At this point, this candle broke up, then did what? Retested this point and then did what? Pushed all the way to the top. Okay, so right now we have an equal high here. Okay, all I simply need to do here is take my trend line, mark this low, mark this low. Okay, now I'm going to call this the current trend line. Okay, so I have this as my current trend line, which means that at some point in time, right, this market may pull back to this area and then do what? Move upwards. Okay, so we're going to be looking for buys on GBPUSD, and remember this week they have a lot of news coming up, so Monday, Tuesday, Wednesday I wouldn't want to trade GU because the news may move it against us and then we'll now think, oh, the market is about to sell, whereas the overall trend is still what? Bullish. Okay, the overall trend is still bullish, so I wouldn't want to get stuck. But if I see the price come somewhere around here, around this trend line, say somewhere around here, and I get a candlestick confirmation that the market is going to buy, I may actually take this buy all the way to the top, but I wouldn't be taking this sell because the market can always continue moving up at any point in time. Okay, so this is what I'm expecting on British pounds, American dollar for this week. Let's look for buy opportunities along the trend line, or you could take a swing trade on the daily time frame as marked. Okay, all right, now finally I'm going to move to EU being the final pair to trade. So EU has been a bit of a thorn in my side because the market has been within a particular range. Okay, the market has been within this range here, and I said, okay, let's see what will happen here. If the price continues coming down, if it breaks below this low, then we'll expect it to bounce around here and move up. But guess what? We had the market range here, so we can call this a sort of flag right here. We can call this a sort of flag right here, or for lack of better words, it's still a flag if you ask me, or we could call it a falling wedge on the higher time frame. Let me zoom out a bit. Okay, so if we take this and we map this, we have something like a falling wedge right here. this is a falling wedge setup. And one thing about falling wedge is once you have a falling wedge, what it simply tells you is the market is going to move upwards. So it's a continuation to the upper side. You understand? The chart patterns do not lie because the chart pattern represents all the buys and sells for the month. Now, if we have this as a falling wedge, right? Now, this is what a falling wedge looks like. The market has pulled up here, pulled back here, pulled up here. It's falling, but the rate of fall is not as much as the rise. Then see what happens. The market has broken out here. The ideal thing is to come down somewhere around here and then look for a buy to the upper side. Okay, now applying the same thing I taught you, or I just explained to you about the fair value gap, we have this point to meet up with. Okay, now since we have this point, what we can expect is we can anticipate that there may be a pullback towards this area, which is around 190, and then we expect the market to move up. Okay, but let's remove this because we're expecting a buy from somewhere around here. Okay, let me put this here. Okay, if we put a buy somewhere around here, our stop loss should be slightly above this low here, which is about 79 pips. Okay, I'll delete this. I'll delete this as well. Okay, now where am I expecting this market to move up to? All right, let's see. I'm going to zoom out a bit and I'm going to see what this area is. So we had the price move from here to this point, and guess what? The price took the 79 fib level. So I'm anticipating, because this 79 fib level was filled with just wicks and the candlestick actually stopped at 70.5 fib level, I'm anticipating that this price may get to this point, but for safety reasons we can at least stop somewhere around here. So it's between 1.1250 and 1.1332. so let me leave it here and remove this. So if I take, say, this and I join this and this, right? Let me join this and this here. We're just sampling. If you remember last week, I also mentioned that because the candlestick is not clear, there are a lot of setups. For example, we have a falling wedge setup here. Okay, let's apply this as well. Okay, so it is possible that this price may pull up to this area or push up to this area. All right, but for now we are going to set this place as the maximum point it can reach to. At least if the market moves ×1 of what you're expecting, you should be able to lock your profit and then trail it. Okay, so 1.125, 1.330 is what we're expecting the market to get to. So overall, we're expecting a bullish market on EU as well. Now, there's something I love about when you're sure that the market is going to be bullish. Once you're sure the market is going to be bullish, all you simply need to do is take advantage of the trend. The trend on gold, GU and EU has shown us that the market is going to be bullish. On gold, we're expecting about 1000 pips. On GU, we're expecting about 500 pips. And on EU, we're expecting between 370 and 420 pips. If you combine all this together, this should give you, there's nothing you're looking for in trading that 1000 pips a month should not be able to give you. And this is given to you free of charge. You don't need anything else. Just mark your chart, wait for the price to get to the area of entry, check your candlestick confirmation. Once you get your candlestick confirmation, based on the candlestick pattern, tighten your stop loss, use your risk management calculator, take your trade and make money from the market. So right here, I'm anticipating that the price may pull back a bit and move up to the stop spot. Okay, but this is on the daily time frame. So what I've simply done is I've shown you the swing setups on gold, GU, and EU. Okay, so they are all looking bullish, which makes it easier for us to trade and make money from this market. Okay, it's easier for us to make money from this market with these trades that we're expecting. Now on the 4-hour time frame, let me go to the 4-hour time frame to see what to expect. All right, fantastic. Last week I mentioned something. I said we could see a bounce or a break here, and I posted this during the week. Now here is what has happened. Here we had a rejection here, we had another rejection here, and we had a third bounce here. So what we have here is what we call a descending triangle. A descending triangle. Let me delete this right here. Let me delete this. Let me delete this because I'm no longer expecting it to go down. And the reason why I'm not expecting it to go down is because this price actually bounced off here, this point. Okay, so I'm expecting the market to move upwards, and the market has broken us. It has given us a new high. What am I expecting right now? I'm expecting this price to pull back a bit, and when the price pulls back, then the price may move upwards. Now we have an order block right here. Okay, we have an order block right here. I'm expecting that this price would pull back into this order block and then do what? Move upwards. It's as simple as that. I'm expecting a pullback into this order block, then we'll move upwards. Now from here, which is the lowest point, to this highest point, let's look at where the price bounced off. Oh, fantastic. The price also bounced. Oh god, understand, everything works together. Price action, smart money concept, Fibonacci, and all that. I did mention last week that this was a breakout 1, 2, this is 3, and now this is 4. This is a bounce right here. We're expecting a 5. So if you're expecting a 5, you're expecting the price to pull up to this area, all right, which is around 135. So if we apply this to what we're expecting on the daily time frame, you can see we are quite close. It's just about 20 pips difference. So we are applying Fibonacci, and Fibonacci is saying the same thing with what we just drew based on our daily time frame. All right, so from here to here, I'm expecting the price to pull back here. If it pulls back here, then we look for a buy somewhere around here and ride the market to the top. Okay, so that said, we'll be looking for a buy somewhere around here. We have our fair value gap here. The price will pull back to this other block, then we can expect it to move up. So this week, please join me, take advantage of the market, wait for the market to pull back. When the market pulls back, look for buy opportunities, and as the market keeps creating new highs, for every pullback you can take additional buys. Every week I've created a habit of sharing my preference. So for this week, my main preference is still gold, because once the market is moving in a trend, the market is most likely to move fast in that direction. Okay, so my main trade will still be gold, GU, and EU, as I've explained. Take advantage of the market, take opportunities to buy, and when you make money from the market, please feel free to leave a comment on YouTube and share how you were able to take advantage of the market and make money. All right, this is the end of my analysis for this week. I believe that this week would also be as profitable, if not more profitable, than we had last week. If you haven't subscribed, please subscribe to this channel. Click the like button on this video, set your alarm so that you can get updates on videos as they are posted. I'm a full-time trader, I'm Bearable King, and I've been thinking about doing YouTube full-time. When I say doing YouTube full-time, it means that maybe Monday to Fridays, when I'm going to take a trade, I'll be doing live videos. In the comment section below, tell me what you think about that, if you would like to follow my live videos and take trades as I'm taking them as well. All right, But for now, before we get to that point, I wish you the best in this trading week, and I encourage you, regardless of how sure we are of the market or we've analyzed the market and we're certain that the market is going to move in a particular way, we have no control over the market. So we are at the mercy of the market, which is the reason why I believe personally, if you've been on Twitter this weekend, the argument that we've had so far has been, is there a role of the spiritual in the Forex market? I believe the spiritual rules over the physical. So when it comes to Forex trading, the spiritual also rules over it. Saying this simply means that you need to pray and commit your week into the hands of God before you start trading. I don't care what religion you stand for, but believe that there is a supreme being that rules over the affairs of the physical. This week I'll share a quick example. So this week earlier on Friday, we had a buy on Thursday on gold around 1906, and when we took the buys and the market moved before the news, because I don't trade the news, I closed my trades. I made about 100 pips or 120 pips, but I had a nudging in my spirit that okay, the market is going to pull back to my entry point and I would have another opportunity to trade after the news. And I did that, and guess what? I took another trade from as low as 1916 and I rode it all the way to 1933, which kind of increased my profit compared to if I had left my trade to run, and it was risk free. So I believe that when you talk about intuitive trading, trading based on your intuition, it's also influenced by the spiritual. There are some times that you wake up in the morning and you be like, okay, let me take a trade, but you know what, let me go and do something and come back to take this trade. By the time you come back, you get a better entry. So those are the rules that the spiritual takes in the market. But once you click on buy or sell, you are at the mercy of the market. I have so much I want to share, maybe because I made this last week was like the best week of my life, and for the month of July, I feel like July is going to be an awesome month because the market has been ranging for like almost 3 months now, from like May. No, it started ranging as far back as February, March. The market has been ranging a bit, doing a bit of correction on the higher time frame, and now we're now in a trend market on the higher time frame. So I feel like between now and August, I may do so much that I may need to take a break for a month to go and relax and actually enjoy the money I'm making from the market. But it's not about me, it's about us. Let's take advantage of the trades this week. Please go back and watch the videos again. Take advantage of the market. Once again, if you're interested in joining my Telegram channel is where I post weekly. And what I do weekly is I share charts based on what we've discussed over the weekend and share opportunities to trade the market. All you simply need to do is chat me up on Telegram, BearbullFX at BearbullFX. Once you chat me up on Telegram, I'll add you to the free signal channel. We do roughly about 500 pips a month free of charge. This week we've done, last week alone we did roughly about 400, so that's we're about to meet our target for the month, and once we do, we could get freebies here and there. But the point is joining the channel and taking advantage of every opportunity that comes your way. Okay, so till next time, I remain Bearbull King. Thank you so much for watching this to the end. Do have a fantastic trading week ahead. Bye bye.